high-price homes could be hitting the market very soon. Rising interest rates aren't the only reason why buyers are pulling back and sellers are getting scared. Real estate agents are in fear of a recession and possibly seeing a shortage of home sales. Should you try and time the market? What one simple real estate secret should realtors do to make sure they position themselves for huge commissions if we see a housing market bubble pop and homes selling for half price in a housing market crash? Stay tuned to find out all the answers and more. Hi everyone, I'm Kim, real estate expert of 17 years and survivor of the last real estate housing crash. I'm so sorry everyone. I apologize. I don't want to bring you bad news, but I'm sharing the facts and the information available to us today, and I will continue to bring you all the info I can to help you navigate this crazy economy and housing market to position yourself to either buy a great home for you and your family or to invest in real estate and build unbelievable wealth through asset appreciation. I can help sellers to make sure they get the absolute most for their home, go under contract quickly and with qualified buyers, and walk away from the closing table with cash. And don't think I left out the agents. I have built a network of the best and top earning agents over the last 17 years, and I can help you increase your earning potential and also reduce your brokerage fees, allowing you to keep more of your hard-earned commissions. If any of this sounds good to you, go ahead and give this video a like, subscribe to the channel, and turn on notifications because you are not going to want to miss any of what I have to share with you. Okay, now let's get right into it. The housing market has cooled off a bit after an incredibly hot stretch fueled by the pandemic. And I am asked multiple times daily by clients and colleagues, is today's housing market in the same predicament that it was back in 2007 or 8? Are we headed for the next great recession? Well, I don't have a crystal ball, but you should strap in, hold on, and educate yourself. It's going to be a bumpy ride. Market data reveals that homeowners today are in far better positions financially than they were in 2010. The average borrower has a credit score of 751 compared to 699 in 2010. And home prices have soared due to the pandemic-fueled demand over the past 2 years, giving homeowners record amounts of equity in their home. Increased home values, equity, and other factors have led to the lowest level of U.S. mortgage debt in history at a low 43% of current home values. Mortgage lenders, banks, underwriters, borrowers have also made much smarter decisions than in previous years. There are currently 2.5 million adjustable rate mortgages outstanding today. That's just 8% of active mortgages. It's the lowest volume on record ever. Adjustable rate mortgages were fantastic to have during the drop and in interest rates over the last several years, but soon you're going to be in great danger if you have one. This isn't all sunshine and rainbows. I'm going to give it to you straight. The National Association of Realtors released a recent report that based on mortgage rates, home prices, and household incomes were at their least affordable level since July of 2007. Freddie Mac reported that the average rate on a 30-year fixed mortgage was 5.78%. This is up from just 1 week ago at a staggering 5.23. The housing market is entering into a perfect storm scenario, and the current state of our economy and global political climate has everyone pretty much on edge and reluctant to make a move to buy, sell, or even refinance. There are reports of major corporations realizing record losses on their Q1 profit and loss statements. Walmart, Target, Costco, Sam's Club, and other major retailers and grocery chains are feeling the pain. High gas and diesel prices and transportation costs are adding fuel to the fire, for lack of better words. And companies like Apple and Google are on hiring freezes. Zillow's been laying off employees, and Revlon's filing for bankruptcy. Times are tough and are only going to get tougher. I received a text message from a new construction builder with some very shocking information. Now, they are offering buyer incentives such as 3% in closing costs and additional bonuses just to buy their houses. That's not to mention that they're finally going to pay agents what they deserve and work hard for. The market is shifting, and now is the time to get prepared as a buyer and seller, and most importantly, as a real estate agent. The housing market, both locally and nationally, isn't showing any signs of clearing up. Interest rates have been climbing consistently for the last few months, and the cost of housing construction has gone up 19% for building materials alone over the course of the last year. Since the beginning of the pandemic, lumber prices have been more volatile than any other time in history, leading to some major headaches for home builders and buyers. Prices and availability of lumber over the past year lead a strong push for home price inflation, on average of over $18,000 more, according to the National Association of Home Builders. Interest rates have been on the rise over the past 3 months, and the housing market is seeing a cool down. In turn, the demand for lumber is falling, and so are the prices. Custom home builders and national home builder chains are going to begin to get desperate. Their timing is just too little, too late. There was and still is a huge demand for homes to be built and sold, but buyers are at a disadvantage. They're scared and more financially cash-strapped as a result of other outside influences, with CPI reported inflation of over 8.6 month to date. Builders are going to find themselves sitting on some extremely expensive inventory with a huge reduction in buyer demand. We could be tracking towards half-price home prices in the near future if we don't see some major changes to our economy. Short of another round of government-backed stimulus checks, the housing market looks like it's headed for a potential crash. So, should we expect to see shortages of properties for sale in the coming months? Folks, how could we possibly have any less inventory than we have right now? When we are officially in a recession, does this mean home prices will be cut to half price? Again, I don't have a crystal ball, but what are your thoughts on this? I want to know. Should you try and time the market? No matter what market we're in, there's always going to be opportunities. And what one simple real estate secret should realtors do to make sure they position themselves for huge commissions if we see a housing market bubble pop and homes selling for half price and a housing market crash? Well, stay tuned for upcoming videos. We'll go over exactly how to align yourself with a changing market. Just as quickly as we saw the real estate and housing market shoot to the moon during the pandemic, we are seeing it change just as quickly now, post-pandemic recovery. I will continue to monitor and report back as often as possible to keep you informed and educated, to help arm you with the tools you need to make your very best decisions when it comes to real estate and wealth building. Please give this video a like, subscribe to the channel, turn on notifications, and comment below with any questions or topic suggestions of future videos and market intel you would like me to bring. As always, thanks for watching, and I will see you really soon. Bye for now.